Good afternoon, everybody. Welcome to Trader Merlin Show for your, what day are we on? We are on our Friday weekend edition, Trading Week wrap-up. I'm going to just make sure my my microphone is good. I've tried to do this every day before the show, but I've been a little bit sidetracked today. I've been a busy boy. Hope you all to go on. Cheers. This is to Big Eb. Then there's McKenna 12 over here for our Friday. Love it. That's right. You might as well, Dan. Might get that out of the way before we start the show today. So cheers, everybody. Hope it's a great week for you. Kind of an abrupt ending there for most of us, but we'll make do. Okay, McKenna 12, or 10, good stuff. All right, let me get into just the overall numbers for the week and start off with, I guess, the most surprising piece. Remember, we're getting this conflicting data all across the board, which is getting really annoying, honestly. Remember a couple weeks ago, we had really bad jobs data, and then all of a sudden the next week we had very positive jobs data. It leaves you scratching your head going, well, who's got the wrong reports here? Well, we've been hearing about inflation being under control and everything seeming to be in check, but our PPI number that came out today, you can see we've got two numbers here, the core PPI, and you also have regular PPI numbers. That was expected to go from 0.4 to 0.3. We actually came out at 0.5. Aha, not what they wanted to see. And the bad news is that that's the second consecutive reading here. Now, well, actually, that does seem a bit strange, doesn't it? The previous one says it's 0.4. At least it's an increase in the PPI numbers here month over month. And to me, not good. This isn't like a catastrophe. Usually Noam says disaster. I don't know if I would say disaster. Look, if we start to get to 0.7, 0.8 with consistency, then it would be a disaster. Remember, we were, or at least I was, kind of freaking out about this PPI number back from August of last year where we had a 0.9. And I was like, oh my goodness, that's bad. But that was 1 point data. So now we have these two consecutive kind of rising bars of producer price index information. And I'm a firm believer that if the producers are going to incur more costs for their goods, then to produce their goods, then they're going to pass it on to you and me. And that's going to ultimately be higher prices. When you look at the core PPI, and if you ever don't know what these indicators represent, you can just click on the little file folder here on Forex Factory, and you can see here it says the price of furnished goods and services sold by producers, excluding food and energy. Oh, let's just take out the stuff that's incredibly volatile. Well, you take out food and energy, and you notice that those numbers are even worse, right? Those last two readings for PPI core, that's a disaster now, right? The regular one's okay, but when you take out food and energy, that means that everything else is increasing, which means housing prices, rent, etc. One of the big factors in inflationary measurements has got to be rising much more quickly to offset that when you take out food and energy. So it seems like food and energy aren't so bad, but it is the other variables in there, cars, spiking, and maybe that has to do with the tariffs. I don't know. I'm not going to try to put my assumptions on it because we know what assumptions do, and I'm just tired of looking bad. What scares me about this, if you look at that core PPI number, notice how high we were. This reading came out at 0.8. Okay, if you look at this 0.8 number, just I'll keep a cursor on that. Look horizontally and go back to the left. The only times we were ever this high was back in August, one peak, but then back in 2021. 2022, when we were in our peak of our COVID terror, is the last time we were that high. Well, we aren't getting these big shutdowns yet, so it's kind of surprising to see numbers that bad for PPI, and we'll see what happens here going forward. If you want the latest release, you can go out to the Bureau of Labor Statistics and just scroll down here to see which areas were increasing the most. So you have here for January, let's go to, there was drops in energy that would offset things. You had, where were the positive increases? The big positive increases was trade. So trade was up 2.5% versus the decline of 2.7% in energy. And what makes me nervous here, again, is this is for January, right? We're talking about January prices. But if I look back at the chart we've been talking about, which is crude oil, here's your monthly. The last 2 months have been significant increases in crude oil. If this energy has actually been bringing down, remember it's lagging. It's using this old data here when we were in this 5-month slide was used for the PPI calculations. This new surge, which has increased significantly, I'll go from the very bottom here, which was the low point in December, to where we are now. That's a 22.4% increase in crude oil. That is going to start to hit the next reading. And again, I don't trust the data that's coming out. Maybe this PPI number they juiced it up a little bit higher just to accommodate for the energy. But then when you take core and take out energy, things are okay. So energy, I think, is going to be our main story for the month of March as that continues to move. Here's your crude oil chart again. I have it on a monthly. I would contend that we still are in a pretty decent downtrend, right? We're making these lower highs, lower lows. However, this has been a pretty substantial bounce for 2 months. Now, where might this go? Well, if we take this horizontal blue line out, get rid of this vertical line here, we got just stuff on the screen that doesn't belong there. If I put a nice horizontal line across this peak, which is from the month of July of last year, that's about $70.51. So we're fairly close to that, about $3.20 away from it at current levels. That's not that big of a distance. I feel like you could really see that break through there. And in my opinion, just the way I look at markets, we start to get above 71, then all of a sudden that downtrend we've experienced since 2022, then that's reversed. And that means inflation is going to be back on hand. And I don't know. I'm definitely in the camp that feels like inflation is going to start to come back and be a topic. You had 3 big rate cuts, you have energy prices starting to surge, and more global tensions. So who knows where it's going to go. Here's Ollie to tell me I'm the doom and gloom guy, but yeah. Insurance, chips, I'll break it down. I didn't have a chance to dive deeper into what was the big catalyst for the spike on core. That I thought was kind of an interesting one. I felt it this week at the grocery store. I wonder how many of you play the same game I do at the grocery store. So every week, there's ads put out, and there's a pattern, a very clear pattern with grocery stores. And for me, here locally in Southern California, it's like every 3 weeks, maybe 4 weeks, there's a rotation. So normally I don't get I don't drink sodas anymore, but it used to be whatever, like $8.99 a 12-pack for Coca-Cola. But then they do a special once a month where it's like, if you buy 2 12-packs, you get 2 12-packs free. So basically you're getting 50% off the prices. Those are the times when I go in and I'll load up on those types of things. Big Eb says, I only buy stuff on sale. Absolutely. I always go and buy things on ad. So as you guys know, I'm kind of in this big health kick. I'm really pushing to get below 15% body fat by March 27th. That's my next test date to go get scanned. So it's about loading up on chicken and veggies, right? Just loading up. So there's 2 main competing stores here. I will make it a point to go shop at whichever one gives me the best deal for chicken thighs or breast, boneless, skinless, and I'll load up. I even bought a deep freezer, so when they're on sale, I just load up. So yeah, I feel it too, but not as much because I am very, very careful about what I buy and I load up on it. Andrea says, yeah, I totally agree. He says, no sodas, make America healthy again. Yeah, sodas are one of the worst things you can do, particularly if I'm trying to get to fat. Big Eb says 15%. That's the goal, Big Eb. If I can, even if it was 15.9, I'd call that a victory. The first time I did it was like 28.6. The second time I got my test, I was 19 point something, and I've been very lax the past 3 weeks, including Vegas, as you guys know. Vegas, trying to lose weight and be healthy in Vegas is just not going to happen. So now that we're back, it's back to the grind, making sure I get to my goals and objectives. Summer's coming, man. I got to have my beach bod. Got to have that rolling. Anyway, let's go through and Waterloo sodas. Love it. Yep, totally, Mickey. I have Waterloos. I have a whole bunch. I've really made those kind of my main beverage now. The challenging thing for many of you here who don't drink, you can probably echo this sentiment, is, man, when you go out with your friends in America, you almost feel peer pressured into drinking alcohol. It's just, you're kind of forced to it. And cocktails have all that sugar in it, so yeah, it's tough. Dwight says, I'm seeing shrinkflation. Protein shakes I drank have cut 2 ounces but charge the same. Yep. And that will be the same. It's always this case of shrinkflation. It drives me nuts. I'll tell you what. When I go and buy a beer, like about a 6-pack of beer, if the bottles are 11.8 or 11.2 ounces now and not 12, I don't buy that brand anymore. I'll just go buy the one that gives me 12 ounce bottles. Les says, you never felt forced to drink? Well, that's it, Les. And when I see you in Hollywood, Florida, I'm going to force you. I'm going to get Les totally drunk. Just kidding, Les. I wouldn't do that anyway. So, all right. Let me go back to our regular scheduled broadcast. I want us to dive into this stuff here, which is the February results. And Mike says, beach bod for the babes. Yeah, for that and for me, man. I like being healthy. So let's talk about February results, and I'll do them one by one here, of course, starting at the bottom, work our way up. Bitcoin just Every time you think it's going to get its feet back on the ground, start to move to the upside, it just gets crushed back down. Here's a monthly chart of Bitcoin. Brutal. Notice the long bottoming tail here. Now, if you broke it down into a shorter time frame, you could see why I chose this small little zone here right around 60,000. To me, that's a line in the sand, a pretty significant line in the sand that if it gets below that, I think you could see much more downside movement all the way down to 37. I hope it does not happen, but markets are strange and crypto is no stranger to bizarre sell-off. So we are now in the 5th consecutive month of declines for Bitcoin, but really what is concerning is the daily chart. After a precipitous fall in any market, in any asset class, and I'll just do the most recent sell-off here, where Bitcoin from January 28th to February 6th, that's 9 trading sessions, it fell almost 34%. That is phenomenal decline. I hate to say phenomenal because it sounds positive, but I mean, it's just atrocious decline in Bitcoin. And that's not even off the all-time high. That's just those last 9 trading sessions. Typically, when you have something that does that, what you're going to try to do is, usually will see, is a bounce up in price action. Well, it did for one day. It literally shot up for one day, and now we are starting to see this just slowly drift lower, not showing much enthusiasm. You can tell by this picture, there's not a lot of buying pressure pushing Bitcoin up at this moment. So this does not look good at all for anybody here who's long anything to do with crypto, because remember, if Bitcoin falls, all of crypto will fall except for maybe 1 or 2 meme coins that get pumped up. Dwight says, is the volume staying the same on Bitcoin as going down? This is it's a great question. It's almost impossible to answer because it's like saying, is the volume on the US dollar or the euro or the yen increasing or decreasing? Because there is no centralized marketplace for Bitcoin. When I look over here, and I'm quoting this chart right here, this is just an index price of Bitcoin. But if I go down here, let's see if I don't think it summarizes all of the volume here of Bitcoin. Volume seems to be rather muted anyway. But typically with crypto, I don't look at volume because it's not a trustworthy measurement because this is a fragmented market. Down here in my crypto list, here's Bitcoin. Well, this is only the volume from Bitstamp. So you're getting a very, 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 very small pool of liquidity over at Bitstamp. Is there a site that aggregates them all together? I'm not sure, but I've kind of just gone and just discounted volume on Bitcoin because it's just hard to track it, right? There's too many different places. So you lost 2 challenge accounts today. Okay. Okay, gold versus the dollar, but we can definitely check that out. Let's see. And he says, I looked earlier at the market close SPY. It was 10 points for the last. Market close SPY is 10 points for the last 4 months. I'm not sure if I get your question there, but I'll bring it up here. We'll go look at the overall gains for SPY for the month here in a second, since I'm just starting off with Bitcoin down near the bottom. If you look at, I'll get to that question when I can get to when I get to it. Sailor's still out there selling reasons to buy MicroStrategy. Big Eb posted, you sent me a great video today of what it would look like if Michael Saylor was pitching MicroStrategy to Shark Tank, which I thought was absolutely fantastic. It was hilarious. It was so spot on. What about MicroStrategy? Guys, you guys know I'm becoming more and more nervous about it, which is why don't hold any MicroStrategy anymore. Just a little too risky for me. Of course, I'm in CoreWeave, I'm in Coinbase, and I'm in Tesla, so I definitely have an appetite for risk. But that's a dangerous place with MicroStrategy. I didn't even watch it today. You're looking just like the price of Bitcoin, just hugging those lows, no real sign of strength at all. Certainly not a bad place to buy if you believe all the numbers. I know people like Mickey here are very bullish on MicroStrategy. That's fine as long as you trust those numbers and that they are truthful about their holdings and actually hold what they say. Then you are seeing basing here. And if Bitcoin does start to bounce, the MicroStrategy should have a much bigger move relationship-wise. But I'm not sticking my neck out yet for buying more Bitcoin. I did, by the way, since I mentioned I was talking with the CEO of E Toro, which hopefully I'll have on at some point down the road. They have a pretty nice deal right now. So with you can get a 10% rate of return on E Toro for free. How many of you would like a 10% rate of return for free? I did. So if you just go to eToro's website, if you open an account with eToro, there's a limited time thing where they will match or give you a reward for deposit. And if it's $5,000 you deposit in your account, they'll give you your choice of like 8 different cryptocurrencies. And when you deposit your funds, you receive that right away. Or it's already in my account. So I deposited $5,000 and I got the eToro deposit going. So we'll see what that transpires to, what ends up growing out to be. I didn't make any trades with eToro yet, but it was a nice little bump deposit that they added in there. Let me see if I can log in here. I've been having issues logging in, but hopefully that will. Okay, sign in. So let me show you. Okay, let me close this out. Here is verification required. Okay, I'll do this later. So I deposited $5,000. You can see that there's this $468. That's just because Ethereum dropped today. So if you go to my portfolio here, I'm going to be $5,000 in cash, but they basically gave me 0.2439 Ethereum. That's what I asked them to give me. I was like, that's not bad, right? That's not too bad. It's a 10% rate of return for free. Now I have to look, but I'm pretty sure that there are going to be some stipulations. Like I probably have to keep that account there for 2 months or 3 months or 6 months, whatever. Totally fine. I got a 10% rate of return for 1 day's worth of deposit. At any moment, depending what the rules are, I could take this Ethereum out or transfer it over to my other wallets, and I'm thinking that that's a pretty good one. Is there a lockout time that you can withdraw the funds, including your 10%? I don't know yet, Big Eb. At this point, I just did it last night or night before last. I'll definitely let you know. But normally when you do this type of thing, there is a stipulation that you have to maintain that $5,000 balance for, I don't know, a month or 3 months or 6 months. But whatever. And I had $5,000 sitting at JP Morgan Chase earning me 0.01% interest. And here I'm going to get 10% for probably less than a year. So yeah, I'm all right with that. Coinbase and Kingdom move with Bitcoin direction as well. Yep, they're pretty much... Yeah, Mickey, it's kind of like a CD, but way better rate of return, right? I mean, you find me a 10% CD out there. The only bad part is, I had to choose. I'd kind of rather have dollars right now, but I chose to get Ethereum because I think long-term Ethereum is going to do fantastic, just not right now. So, yeah, down 6% today on that $500 I got for free, but that's all right. My cash is still the same. Cash is still looking good. Anyway, thought I'd share that one with you for those of you who know. And by the way, let me see here. I think I can actually give you guys invite copy link. I'm just going to put this in here, and in case anybody does it, I think even if you do this, I'll get an extra something, and maybe you get some extra too. Up to 10 for a total of $300. So basically, every time I refer a friend, we each get $30. Hey, why not? Why not? In case you guys are looking for crypto. And by the way, I looked at their fee structure. They're cheaper than Coinbase. So Coinbase, even on their advanced platform, the cheapest you're going to get is about 1.24%. eToro is 1% flat. And I tried it at different purchase amounts. It's 1% flat. So it's definitely cheaper than Coinbase. The interface is a little clunky. When you go out here and go to Discover, it makes it really basic. What eToro does, it's interesting, is they have this copy trader thing where you can just copy people, and I definitely am not a fan myself of that. I'd rather just do it myself. But yeah, I don't know if I like it. But if you want to buy Bitcoin, you would just click that. They don't show you the order book. They don't show you level 2, which is important, right? This looks like a basic platform. So what I did is I brought up 2 other platforms. I brought up Coinbase's Pro, and I brought up Kraken Pro to see what their level 2 screens look like. And this was actually giving you real market price, not their inflated spread way. So I thought that was somewhat interesting. So just a little food for thought there. Are they FDIC insured? I didn't even take the time to look. My gut's going to tell me yes, but I'll get you more update on Monday when I go do a deep dive. But thought that might be of interest for you. As I built this crypto class out, I kind of focus on 4 exchanges: Coinbase, Kraken, Binance, and Gemini, and Binance.us. But yeah, this is a new contender, new one in the mix. Anthropic CEO said, nope, yep, Trump said he's parting way with Anthropic, and he's trying to get other agencies to separate there. There is definitely some drama brewing there. Who knows whether this is other entities paying to get more visibility from our president or to get utilized for different projects, but I think they should be upset. I think there is a very real potential danger here for AI systems if it ends our Department of Defense and other government databases. I think we'd all agree that having Anthropic or OpenAI, ChatGPT, X, Gemini have access to government stuff, and that just, I don't know. I wouldn't feel that comfortable with that as an American. You can have access to stuff on the web, libraries, books, internet chat rooms, whatever, but not our defense secrets. I think that's probably a bad idea, but cheers to that one. Steve says, not a fan of our government tracking us. Well, it's been that way, and I don't see that changing anytime soon. All right, we were long-winded. That was Bitcoin, down 21.7%, which is by far your worst performer, and it does make me nervous. I am still bearish on Bitcoin, even though I don't want to say it. I just really feel bad being bearish, but it is what it is, what prices tell me to do. Next on the list, the 10-year yield. This has been very surprising over the past 5 or 6 days, or actually, let's just say more than that, the past couple weeks. Here is your massive decline. The 10-year yield dropped 6.94%. Now, this is a great thing from a market boom perspective. However, look at the price decline here, or the yield decline. If we go back to, let's say, the high point for this month, which is back on February 3rd, the yield for the 10-year bond was 4.3%, 4.2999. All right, now we're at 3.949. I mean, that's a 30 basis point decline plus in less than a month. That's pretty significant. And this is good news on one front and bad on the other. I'll see if you guys can figure out why. The good news is it's going to increase house affordability. When you have your 30-year fixed rate mortgage drop sub 6% for the first time in a long time, that opens the door to more affordability, meaning more people can buy homes. That's great because that floods the money with more capital. You guys tell me, what is bad about this? When you see this start to fall like this, why is this bad? Why should you be kind of concerned here that we're watching the 10-year yield decline so rapidly? What's the direct domino effect here of yields declining? And I'm stalling a little bit to see what your answers are, typing into chat here. There's multiples of us who have been thinking these yields are going to go higher. Instead, they're going the other way around. So let's see. The response coming in: flight to safety, economic slowdown, recession. Not necessarily slowdown yet. Lack of buyers for bonds. Correct. So there'll be fewer buyers for this as the yields decline. Let's see, you have inflation. So Les says inflation. Yes, but where specifically? Oh, you guys got some good stuff in here. Credit card going to go crazy with defaults. Well, it should actually get a little bit better on one hand and bad on another. Won't seller increase the price as rates go down? Correct. So what this does, we've already saw on PPI numbers today an increase that was higher than normal. Consumer price index most likely will follow in the coming weeks with higher numbers as well. And if the core drops out, that means you take food and energy out of the equation, then it's coming from a variety of different areas, and housing could be that piece. If you drop the yields on the 30-year fixed rate mortgage, that means houses become more affordable, which means more people can buy homes, which means sellers will raise their prices. When sellers raise their prices and people are investors buying those properties as an investment, they're going to rent them out at higher rental rates, which will push inflation up even higher. So yes, Les, I think you're right with the inflation side of things, but I think predominantly coming from the housing sector, from real estate. So it's great on one hand, especially for those of you who like to buy a home. Yeah, this is great. However, this is going to really start to boost prices up even more if this continues to fall. And I mean, the decline this is no joke. I mean, this is a really fast decline. I mean, it took us from October all the way to February to make those gains, and we've erased it in just under a month. So we've got like 5 months worth of gains up to get that yield up to where it was, right around 4.3%, and all of a sudden gave it all back, all of it, in under a month. That is pretty remarkable. I have some homes for sale. Hey, as long as you make good prices out there, I'm sure you'll get some deals on those ones, but you're going to have more buyers, right? You're going to have more people that can qualify. Because remember, when something's at 6.5%, you may not qualify, but once it's at 5.8%, you may qualify because you can make those payments. So anyway, that was probably the most surprising. When Bitcoin, I wasn't surprised on so much. Just felt like that trend was going to continue and see more downside movement. But the 10-year, Yeah, that's a pretty steep drop in yield for a very short window of time. All right, moving up the list. Obviously, this is coming off the heels of the Magnificent Seven looking pretty darn ugly. NASDAQ 100 was down 2.76% for the month. It was your worst performer from an index perspective. And really, it all comes off almost like a double top formation. You look at the peak here for the NASDAQ. We double topped on January 28th and sold off aggressively over the next 8 sessions. Well, now it feels like we're just trying to get our feet back on the ground here, and it just hasn't happened. A little bit concerned with the tech space, particularly when we look at those Mag 7. Sorry, I still got a frog in my throat. But, Meta really started this month off really strong, and for the month gave back quite a bit. I mean, its peak here for this month when it gapped up on their earnings announcements, their high was $744, and here we're now $100 off that. $100 off that already for Meta. NVIDIA. I don't think that this is exactly, freak out moment because we're still within that giant yellow box, but we broke outside. You had a bull trap on their earnings call when they jumped up here on Wednesday and then just cratered ever since. And it wouldn't surprise me to see NVIDIA with this momentum moving all the way back down towards that 171 mark or 172 mark. It's only $5 away. So not good for NVIDIA. Apple, same thing. You got this kind of I call it a pennant formation because it's making lower highs and higher lows. Normally, this would continue in the direction of the prevailing trend, which is up. So not horrible for Apple. Microsoft, though, this is bad. I mean, it keeps breaking through demand zones, and for me, it's like looks like it's going to continue to go lower. So maybe this is the AI catching up with Microsoft a little bit, but they do not look good at all. Tesla, same thing. Tesla is not making new lows yet, but it certainly doesn't really have much strength, right? We sold off aggressively from the same height as pretty much everything else back in December. Tesla was at a high price back then of almost $500. Now we're at $400. So it's down 20% and not making new highs. So it feels okay because it's not making new lows. But every time it rallies, as feels like most things in the market today, when it rallies, it just gets crushed right back down. So this does not look good, and I am long on Tesla. Amazon, which I don't own any of, just because that earnings thing got crushed, but it seems like it's bouncing right now, which would be okay. And then finally, you got Google on our Mag 7. You could make the argument that this is turning into a head and shoulder pattern. Let me draw this line out here. I know some of you are going to go, come on, Merlin, that's abstract, but I think you guys can see it right there. You have from the break above this line on November 20th, formed the left shoulder, came back down to that breakout point on December 17th. We rallied all the way up to this peak high here, the top of the head on February 3rd. We sold all the way back down to the neckline on February 17th. Now we have a small little bump of a shoulder, and now it's racing back down towards this 298.41 is a line I have drawn here as that neckline. So something for you to consider. Again, I'm looking for things to break below key points. For me, Alphabet breaking below that, let's say 298 mark, I think is a pretty significant one and could reverse their overall trend. I hate to say it. I know, Ollie. I know. Just looking at what the price says. Yes, exactly, Andy. It's the Quasimodo version of the head and shoulders pattern. Doesn't look that great. Does not look that great. All right. So that was your Mag 7. Again, the 2.76% slide for the NASDAQ 100. Not great, but still, picture-wise, it's okay, right? It's nothing catastrophic. Let's look at something a little bit better. We go from the NASDAQ to the S&P, which was about half of those losses, down 1.26% for the month. But this is really a spread trader's dream. I'm hoping, Les, you're crushing this with an iron condors because it's just been stuck in this range since November of last year. Now, it's a wide range, but, we're sitting pretty much dead center of it right now, just slightly below the midpoint of this zone. And as a spread trader, this is stuff you dream about, where markets really don't do much and just traverse sideways. So 1.26% slide for the month for the S&P. All in all, not that bad. Now, it's going to get better. We finally move into positive territory with the Russell 2000, and that's coming off the heels of a 1.7% down move today alone. So here is your daily chart of it. We keep adjusting the goalposts. It's like technical analysis. You just keep adjusting the goalposts till you finally find a pattern that fits for you. Either way, it still is a pennant formation, right? We are still making higher lows and lower highs. Prevailing trend should win here, but right now, real weak day for the Russell, as I mentioned, down 1.71%, closing at 2634.7. Ouch. Okay, it gets better. I'm going to show you some better numbers here. I promise. Dollar index. We already looked at the 30-year fixed rate, the 10-year bond. Dollar index was up, but really, I'm not that impressed with it. It's just we're starting to find a little bit of a footing here. Again, I have a line drawn here right around 98, which we have not been able to close above, but we are making these higher lows, which I think is a very important piece here for that dollar index. The more this starts to move up and get a close above 98, then I'll feel confident the dollar is going to continue its rally up to the upside, which means equity markets facing more pain. If it breaks 98, I would expect this S&P to start breaking down below that 67.71 mark we have mapped out here as our line in the sand on that one. All right, almost done with the walkthrough here of the broad markets. Crude oil was up 3.37%. And, today helped. It was up 2.78% for crude oil today. Big jump up today. And again, I think this goes back to Trump's talk on Iran. And things aren't moving fast enough. It's going to go to war. It's going to be huge. Going to attack them. Going to do something fun. I just feel like this is an imminent thing, that there's going to be some move on Iran, and I think the market's pricing that in. You can see the way this has been building up. And again, if that does happen, I would expect to see something like the S&P take a real sharp spike down, only for a couple of days before it starts a significant rally back up. Normally, conflict like that is a knee-jerk reaction to the downside, and then things will pop right back up as the market's pricing the war machine turning, which is great for an economy. Because of that interest rate drop you mentioned is pushing metals back up. Yep, exactly. And when you see the dollar rally like this, when you see the dollar's been slowly rallying, at least over the past couple of weeks, that is going to have an impact on commodity prices, but it's not really that aggressive here. I think when you look at the yields dropping, this is maybe a bigger impact on the price of commodities. Now, when you have the yields fall like this, a couple of things are going to happen. Number one is what this reflects is a lack of buyers. So let me take it back. I'm misspoken here. It's the whiskey talking, folks. It's the whiskey talking. What this reflects is actually tremendous amounts of buyers, because the more buyers that come in, the less yield they are going to have to charge. So what you got here is significant demand for the 10-year bond, which in theory should create more demand for the U.S. dollar. People have to have U.S. dollars to buy these bonds if it's coming internationally, and that is partially, I think, the reason why we've seen this move up here in the dollar index over the past month or so. Now, if this yield continues to fall, that makes me a little bit nervous, because at a certain point, I think that a falling yield like this, it will stop and turn around. Because ultimately, the buyers of these bonds will go, you know what, we're not getting the yield we want. We can get that from another marketplace, and they'll stop buying, and then the yields will start to move back up. So, Andy, what am I drinking? I am drinking McKenna 10-year, who was Big Eb's gift to me out there. So McKenna 10-year is what we got today. All right, almost done with our top 8 here. Finally, no shocker, no surprise, gold was your best performer. 11.56%. So let's take a quick peek just at the daily, which looks absolutely fantastic. I mean, this chart is just incredible. What I like, though, better is looking at the monthly. Let's look at the monthly just to paint a real crazy picture of growth and acceleration. So if we look at this, I'm going to have to count them one by one, because it's just difficult for me to see them all. The last time we had a red candle was June of last year. So we've had 8 months in a row of gains for gold. And it's not just gains for gold. These are significant gains. I mean, the previous month, if you look at what happened for the month of January, gold was up 9.31%. Now we're up 11.56%. The month before that, or actually the month of October through November, 6.47. So these are stellar gains being posted. And I thought with this monthly that we saw here for January, I really thought we were going to see gold have a big pullback, because this is like the mother of shooting stars, right? You guys see that long topping tail on the candle from last month? That's just a monster, but it did not. And as Marcia says, that flight to safety trade, yeah. And there's so many things to want to run to safety from. There's the political side of it, right? So we have Capitol Hill arguments and debt ceiling problems. There's also the war possible side of it. Is there war happening with Iran? Okay, well, we want to protect ourselves there and go to something tangible like gold, silver, other precious metals. Then you also have the potential for a market collapse, which now we're seeing inflation start to surge. So there's so many different variables that are driving people to gold. The only part I'm nervous about with that is when you have so many people going into an asset class, it becomes a crowded trade. And when you have enough people in that trade, it'll have a pretty aggressive move the opposite way, like we saw with silver, right? SLV. I mean, that was just an incredible shooting star formation for the month of January. Let's go back to a daily so we can check that bad boy out. So it's definitely starting to recoup here a little bit of those losses, but silver just had too crowded of a trade. Too crowded, too much leverage going into it, and we talked about that for a while. And I said multiple times, I expect there to be a big correction in silver, but it'll continue its uptrend at a more normal ascent here, as historically precious metals do. COMEX thinks a nothing burger. Yeah, I don't know if it's a nothing burger, but I think it got a little bit over too hyped. Andrea says, let's hope that Bitcoin can catch up with gold. Well, that would be nice if it did, but given the historical precedent from Bitcoin and what it does, I would not hang my hat on that one for sure. Definitely not going to hang my hat on that one. So that's your month of February results. Pretty significant ebbs and flows here with capital. Big losers were crypto, big winners, precious metals and commodities. He wants me to show XLE, sure. So we can show that XLE chart. This one has been absolutely fantastic. And again, I feel like this is a crowded trade. Let me bring this up. That's a daily. Let's go to a monthly here just so you can see the separation. All right, here's your last 2 months. And when you strip out food and energy, when you take out food and energy, we have high inflation. Well, I think that this chart is reflecting that that's about to change. There's no way we can continue to get this significant pop in energy. And these are obviously not oil, but this is oil companies and energy companies. We are witnessing a monster move in that. So just the last 2 months, from the low that we saw back in December to where we closed at today, you're looking at energy up 27%. If anybody believes that's not going to impact inflation, I think you need to put down the pipe or put your glass of whiskey back down. But yeah, this is going to be a factor going forward. Look at some other things. Utilities. Right? And usually utilities do better in an inflationary environment. They are surging as well in this month. I mean, it's been a phenomenal month. Obviously, healthcare here, which I don't care too much for, but it's moving as well. You have real estate, not looking that great. Building materials. I mean, the last 2 months have been phenomenal for most market segments. And I just feel like we're going to have a correction, a pullback here. Nothing dramatic, but I think we'll have a pullback here soon. It just seems to be way too exhausted. I mean, look at industrials. State Street Industrial ETF, which is the XLI. This is just nonstop gains. Phenomenal. Here you have consumer discretionary. That's probably the weakest looking one. Technology, that's starting to hesitate a little bit, but still got a great move to the upside. And then financials. It's all looking good. All looks good. Michael says, if no problem with Iran, that oil will fall hard. In principle. But, the thing with Iran and the Middle East is everything's great, and then all of a sudden something pops up and we get, it's like every 8 to 12 months something happens, some flare-up happens, and that just keeps the oil markets exciting. You get these big moves up, these big moves down. Let's hope it's a nothing, right? No one wants to see a loss of life out there, but we have people who are hotheads, and yeah. Big Ep said, "Do you see that SpaceX IPO is expected to be a 1.75 trillion valuation?" Yeah, saw that. Maybe launching in April. I would tell you to be careful with that one. That's going to be so overpriced. Oh my goodness. I mean, yeah, that's going to be a wild one. Absolutely. Dan says embassy in Jerusalem has warned Americans to go home before flights are canceled. Probably not a bad idea. Be safe. Be safe out there. All right, let me show you updated trades. I don't have my CoreWeave in here, but I can look at my phone. Oh, I actually wrote it down here. So I took some more risk today. So these are the current positions I hold. These are adjusted for the option premium that I collected. So still looking pretty decent here on the Coinbase. Tesla not so much. But I showed you yesterday, these are the calls I sold against Tesla. Those expire next week. My Coinbase calls expired today, worthless. I sold new ones on my position at 192.50. Those expire next Friday. Collected 205 on those. It's been a pretty wild move over the past few weeks for Coinbase, but here's what we've got cooking. So let me adjust my lines here just so we can kind of have them on the screen, because I have the 192.50, and then my dollar cost average, which I like to have on the screen. In this case, is going to be 151. So for now, it's looking okay. 151.22, and that does take into account the premium I collected for both the previous ones. So I feel okay with this, but not too. Yeah. Big F says CoreWeave got pounded today. Yes, CRWV, and it didn't relent much. It was not a good day for CoreWeave, that's for sure. I ended up selling the $71 strike, so that's down here. I was basically looking for as it came back. I know that I could have gone for the 74s, but I just was I was concerned that we're going to most likely hit that 74 mark, just because of how much fear and pain was in it today. It was down at one point like 24%. Now, I went to this low point here from December 31st of last year, which is right around $70.50. So I sold the $71 strikes. I got $1.44 out of that, and that expires next week. So not bad. I mean, I'm basically looking at a 2% rate of return for the week, as long as it stays above 71. And we're already up a little bit in the after-hours session, but a long week ahead of us for what could be for CoreWeave. So I'll update my spreadsheet here in a little bit, but those are the 3 trades I have open right now. All right. Marsha wants to know about Walmart. Any good buy areas? So next week, there's some pretty important numbers coming out. You have earnings for Walmart, which were reported just last week. But this coming week, we have a lot of other retailers. You've got Target, you have TJ Maxx, you've got Costco. And not only are they reporting, but on Friday, we have our retail sales number. So I look at this price chart here, and there are a couple of decent spots. I mean, I guess it depends on how aggressive you're going to be. But I'll put some yellow boxes on here where I would be interested in buying. The one I like the most would be a very tiny little range right here. But that's a long ways away. That's going to be down between 115.50 and call it 116.64. But are we going to get there? I doubt it. I mean, look at the trend of Walmart. That'd be a significant pullback for it to get down to those levels. I don't see it getting down to those levels anytime soon, unless retail sales numbers are absolutely horrible. But I just don't see that happening. Now you could also look at this zone right here, which is between 121 and 123. That's a more logical point, just because it's closer to recent price. But the way we move today on Walmart just shows acceleration out of that area. I doubt we'll get back down there, but those would be the 2 most closest ones that I would be interested in, Marsha, for Walmart. But yeah, I mean, this is just a great trend. Jump on that trend whenever you can, ideally in a pullback spot, because it looks like Walmart's going to continue to do better and better and better. All right. What else do we have on here? So there's a whole bunch of comments I had to miss here, but let me scroll back here. I'm only bringing this up. Sometimes I think you're trolling me, Michael, but we do PAGs again. This chart, we mentioned this last time that you brought it up here. I like it. And I can't believe I'm saying it, because a lot of stuff that you showed me, Michael, is just in a horrific downtrend, and you're just praying that it goes up. This one looks decent, right? It's making higher highs, higher lows. I mean, this is actually a great-looking trend. And yeah, I would actually draw a secondary trend line here to modify towards current price, which would look more, at least like this. You know, that blue line there shows just a bit of acceleration in the trend that's been going on. And as long as it incorporates the most points of contact on this, I actually like that one. I'm not so concerned with their dividends, their upgrades, or anything like that. To me, it's just the trend. The trend is more important than anything in my book, right? That's just the way that I view these things. But yeah, I like this one. I'm glad that you're in something that's moving up and trending. A lot of times, you are in stuff that's just in free fall, and that's a recipe for disaster long term. This looks good, right? And I don't know what they do. I don't care what they do. As long as they're not biotech, as long as they're not pharmaceuticals, I would be fine to jump on this one myself. And it actually looks like at the levels that we're at are very close to where you're at right now. Right now we're trading at 10:58 in the after-hour session. You're coming right down to that blue uptrending line. So not a bad place to be. You're buying back in a continuation here, so I like it. You get a thumbs up on that one. Okay, what's the time here? Holy cow, time's flying. I still have my whiskey to get through here. So I've got multiple questions on this one, and I think I might need to do a whole show on it again down the road sometime. But because he's participates quite a bit in the program and sent this long one in here, this is from Technician JD. Well, allow me to read through this one, and I'll give you my 2 cents in here. My questions are, do you mainly like the weekly? So he's talking about how he's in different trading communities, and he wants to know more about my preference. And please understand, this is my preference. So you're going to have some people in the audience that just don't like that style, and that's okay. We all have to find out what works for us. So it's about trading options. He was looking at my 1% strategy. He said, my questions are, do you mainly like the weeklies or prefer bi-weeklies or even monthlies? And then just divide by the number of weeks to make sure you're hitting your nearing your weekly percentage goal. Or do you prefer a certain delta? Number one, I don't look at deltas. I don't look at any of the Greeks. I know it's going to really upset a lot of people here. Like, what? He doesn't look at the Greeks? I don't look at the Greeks. He says, I know that with higher premiums comes typically higher risk management unless volatility is just through the roof. But even then, assignment is very possible. There's no such thing as a free lunch, but do you find yourself in management mode a lot aiming for that 1%? So typically what I'm looking at is I'm looking at markets where it's something that I would like to own, and I have multiple accounts. In the biggest one, I'm trading ETFs, diversified instruments, and no leverage products whatsoever. It's just going to be, this watch list I have on the left-hand side or right-hand side of my screen here. That's a lot of these are in there. Utilities and healthcare, real estate, building materials, energy, all the major ETFs like QQQ, IWM, SPY, DIA, all that stuff can be in there. So that is in my broader one. In that account, I'm striving for monthlies. Because I've got so much going on, as I think many of you do, that I don't want to do dailies. I don't want to do weeklies. In that account, I want to do monthlies, set and forget, and just let it go and go with the big picture trend. In the account that I share with you here, this is more of a hybrid account. I am trading very risky stuff. As you guys, I'm in Tesla, I'm in CoreWeave, and I'm in Coinbase right now. I mean, come on, I'm juggling chainsaws. And I wouldn't mind owning Coinbase long term. I think once they get their everything exchange, they'll be doing really well. I want to own Tesla long term. I'm a big fan of Tesla, and I think once that robot starts to roll out, everything's going to change. So I'm fine owning that one. CoreWeave, not really a big fan. I'm capitalizing on the emotion and fear and panic that's wrapped around CoreWeave right now. So that one I don't necessarily want to own, but if it gets down to 71 next week and I've got to deal with that one, I'll probably dump it because I don't want to take ownership of it. But the premium was really, really good. Getting over $1.40, I think it was 144 was my number. Not bad. So over 2% rate of return for 1 week, I'm okay with that. So to Technician JD's point, I don't always want to get assigned. And yes, there is damage control when I do get assigned sometimes. And typically, if it's something that I wanted to own, I'll just go ahead and start selling covered calls against it. Now, I had to stop myself out of the Coinbase a couple weeks ago because it hit my stop loss, right? I just needed to make sure I got out of that one because it violated my numbers. And unfortunately, it just came sprinting back, and I wish I would have held it, but it is what it is. It's part of the game. I also found another level where I was happy maybe buying back in, and it filled me the other day, which is fantastic. But Tesla, yeah, I'm not necessarily in damage control mode. So my average price on Tesla right now is 403.32, and you see where Tesla is at. I'm underwater right now on Tesla, but every week I'm selling covered calls against this thing and dropping my average and dropping it further and dropping it further. So it's not been that great for this Tesla trade, but I'm comfortable holding it long term. I do have a number that I'll get out. But yeah, I like weekly in this case because it's much more active and it allows me to share a little bit more with you guys, at least in this account, what's going on. So I like weeklies. I think it gives you some excitement. I think it gives you skin in the game on a weekly basis. Plus, I love looking at the weekly returns. It's easy for me to price in what my weekly return is going to be when I do that. Now, typically how I'm determining it is, let's say I wanted to buy a specific stock at, let's say it's trading at $60 and I'm looking to see where I can get 1% rate of return. If I look at the options strike prices, I'll go and try to sell puts where I want to accumulate it, where it's going to get me at least 1% for the week. And if that's not acceptable, then I'll just go move on to something else. Because ideally, I want it to be at a demand zone. It would be a perfect spot to buy it. But also, I'd like it to be maybe far enough away from current price where I'm not going to get executed. Typically, with those broad market ETFs, you don't get a lot of volatility. The premium is really small. When you are trading the volatile stuff, your Mag 7 stuff, etc., yeah, you're going to get much more premium, but you got a lot more risk too. And that's why MicroStrategy was so good for so long. But that thing, that's just a dangerous beast when you're trading options on it. So hopefully that helped you, JD. Yeah, hope that helped. Unless, of course, the doo-doo hits the fan on a weekend. Yeah, that's happened. Selling those 1 weeks to to expiration puts on a Friday are great contract management. And I generally do like to sell them on a Friday because you get that 2 extra days of free decay. But you're right, all hell could break loose over the weekend. You're like, wow, man. And it doesn't happen all the time. I would argue it happens more when we have Trump in office, right? The weekends used to be very calm. But when Trump has been in office, both the first term and this term, anything can happen over the weekend, right? I'm just always stressed now when I go into the weekend because anything that guy does can create massive moves, which is good and bad, right? It creates opportunity. All right, let me go into what's happening on a Monday. I already warned you guys that Monday I'm going to be just dead to the world because I am going to be teaching all day a crypto program on Monday. So I'll be gassed. I will be definitely gassed on Monday, but let me go. That's going to be the 2nd. So let's bring up your calendar here so you can see what's happening. Not a lot of big announcements on the front end load of the week, right? So not a lot of activity happening the first part of the week. You do have some manufacturing PMI numbers. You can see here at 10 a.m. on Monday, you have the ISM manufacturing PMI as well as prices. You also have final manufacturing PMI. So that's probably your more important piece here. You do have some central banks in case you guys are trading trading Forex. You've got members of the banks of England, the Reserve Bank of Australia, ECB, Lagarde will be speaking. So you have definitely some big players will be speaking. And then you have some earnings announcements on Monday, but honestly, there's nothing that significant reporting earnings on Monday. I'll bring up the list here for you just so you can see it. But now, really, Broadcom for me is the only really exciting one that's happening next week, and that's going to happen on Wednesday. So here is your Monday look. Come on. So here's Monday, and our only one in there is SATS, which is EchoStar. Everything else, I just, don't really feel like this is that important. So there you go. Let's see. Mark says, do you have an options expert for the show? I've had options expert on here quite a few times. But, the only problem for me is it's so difficult for me to go and find guests. There's no value add. Most of the people I bring on this program are actually traders. So what reward is it for them? My inbox right now for tradermerlin@gmail.com has got probably 30 people that have been asking me to get their expert on this show. And I want to do it, but then again, I don't want to because I know they're all going to be peddling something and trying to get you to buy their course or their class or something. I just don't like that garbage. So I've been a little bit protective of the audience here, but maybe I'll bring some of these guys on. But yeah, I can bring on an options expert. Corey Lane's great. Very good. And he says, if you have to pick between Tesla and Microsoft, what would you pick? I'm not sure. That's a really tough one. Personally, I like Tesla better. I like Elon Musk better. I think that he is more an achiever, more of a go-getter. I think if you're less risk averse, then Microsoft would be the easy answer, right? Microsoft is a much more mature company. It's got much more tentacles in different business aspects. In my opinion, I would think that Microsoft is more of a blue chip company, right? Tesla, I would put in the category of still a growth stock, even though their auto business, I think, is matured enough that it's an auto company. With that regard, we haven't seen anything happen with regards to AI or robotics yet. And I think when that happens, then I'd rather be owning Tesla. Oh, yeah, sure. We've talked about the Tesla or Microsoft quite a bit. If you look at them side by side, we can actually stack them on top of each other if you want. But let's go to where's Microsoft? Where's Mr. Softy? All right, you wanted a monthly. It's definitely had a pretty significant haircut, and we've mapped out those zones. Yeah, I mean, this would definitely be a place long term if you're interested in Microsoft. Tesla doesn't have that same look and feel at all. I still think it feels like it almost has more downside movement here potential. But yeah, I just like Tesla better. I think Tesla is a better suited to capitalize on the latest market dynamics, which is going to be robotics and AI. Microsoft is jumping and building all their AI data centers and incorporating it into their infrastructure, which is great. But they don't have a robot. They don't have the largest database of driving data on the planet, and I think that has tremendous value as well. Yeah. There you go. Microsoft is a better buy now, but has lost some of its shine in the last 6 months. That just makes it a cheaper buy, right? Value added. Buy at these lower prices. All right. That's going to do it for me, everybody. We're not going to do a 1 hour show today, even though I only got 4 minutes left. If you have something you want me to discuss on Monday, send it on in. I'm not sure I'll be able to get to it yet. but I'm going to try my best to get to whatever questions are sent in over the weekend. You can email me at tradermerlin@gmail.com or put your comments down below any of the YouTube videos. If you're new, hit the like, subscribe button, but all you guys are regulars anyway. So thank you guys so much. Have a fantastic remainder of your day. I'm going to finish this glass of whiskey and go get some sunshine. I'll see you guys on Monday. Take care.